Weak global cues dent Dalal Street. Sensex slides over 360. Nifty gives up 10,800 to fall below its 200-day moving average.
Auto stocks tumble in trade. Eicher loses over 9% as Royal Enfield sales weaken. Mahindra & Mahindra 2 falls over 4%. Pawan Goenka tells CNBC TV 18 the November and December months were used to essentially wind down piled up inventory. He expects some turnaround in the fourth quarter.
Hero Motors Pawan Munjal calls for a GST cut on two-wheelers from the current 28% to 18%. Says they cannot be classified under luxury goods. Rajiv Bajaj differs, says a rate cut now will lead to a pile-up in inventory and suppress demand. Further calls for a rate cut attached to safety norms.
Metal stocks tumble in trade today. Nifty Metal Index drops over 3% on fears of a global growth slowdown after the Chinese Caixin manufacturing PMI contracts for the first time since May of 2017.
The swap ratio for the merger of Dena-Vijaya and Bank of Baroda is out. 100 shares of Dena Bank will fetch 11 shares of Bank of Baroda, and 100 shares of Vijaya will fetch just over 40 shares of Bank of Baroda. Well, those were the top 5 headlines from Dalal Street on the second day of the year and the first day of real trading, you will have to say, and it was marked by weakness. Hello and welcome to Markets Today. Talk Back, the show where we tell you all that happened in those 6 hours of trading today in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant.
Lata, hi. The market definitely picking a trend on the downside and kind of staying with it. Although by close, the market did recover some, 40 points or so on the Nifty from the lows. The Bank Nifty actually recovering even more. Over the next 30 minutes, we will talk about that. We'll talk about what happened in the market, the drivers for this sell-off that we saw, and of course, global markets as well. We'll take your questions, and to answer all your stock questions, Ashwini Gujral and Prakash Devan are with us, and we'll just go across to them shortly. Gentlemen, thanks very much, both of you, for joining in. But let's, as always, spend 2 minutes taking a look at what really happened in the markets today. Lata, in a way, it was the first full trading session for global markets, and it wasn't a good one, not a pretty sight.
Well, actually, for me, the surprise was why didn't the markets fall from the word go? And how come they held on up until noon and a little afternoon and then fell? Because there were several reasons why it should have be global cues. I mean, we opened to fairly deep gashes in the Asian market. Hang Seng at one point was down over 2%. I think it ended there. And the other markets, Kospi and Shanghai, also were down 1.5%. The Kospi, the Caixin numbers that came in, PMI numbers for China showed contraction. It went below 50. As well, domestically, the auto sales numbers were nothing to write home about. We already had a preview on Tuesday, on Tuesday. And overnight, the other big numbers that came in, Tamo, M&M, Eicher, all of them only confirmed the slowdown that we got to know yesterday. So there were good reasons for the market to fall, and one was a little surprised that they held on till about 1 o'clock or 2 o'clock, and then came the big fall. The currency was another one which played a little funny. I mean, it was steady for a better part around that 69.60, 69.70 mark, and then started dwindling or declining after about 1:30 or 2. So, and this was coming in a context where even the dollar was weak. So the rupee was weakening despite dollar weakness. That was clearly indicating that there was a bit of a India-specific problem, and there was someone at least pulling out dollars. The European markets, when they opened, only confirmed that the world is clearly worried about something, and that should be growth. What more did the markets worry about?
The broader market, Lata, also sold off. So, if you look at what really happened, it'll come through. I mean, the mid-cap index, a small-cap index, I mean, there was pressure. Naturally, I mean, it was a broad sell-down that we saw. In terms of sectors, pretty much across the board. I mean, actually, except the IT index, which maybe because of the rupee or whatever, was up about 0.2% or so, all other sectors were in the red. The top losers are on your screen. What were the top losers as far as the Nifty itself is concerned? Eicher Motors, clearly. We spoke that as part of the headlines as well. And reasons, and we'll discuss the reasons in a bit. JSW Steel was down 5, Vedanta, Mahindra & Mahindra had another bad day, Tata Steel, Hindalco were the other big ones. So long line of losers, and I'm just only highlighting the big ones. Bank of Baroda, Jet Airways, TVS Motors were the big laggards from the broader market that I would like to highlight. GAIL, DLF, Future Retail. I mean, it was pretty evident as far as the market breadth is concerned that it wasn't. People were over the last couple of days starting to find hard in the fact that the market was broadening. Mid caps and small caps, etc., were also starting to do well. But as the market came down today, you had pressure in pretty much all pockets of the market with little place to really hide. So that's essentially markets today, Lata.
Okay, well, let's straightway get to our guests to ask them what they've made of today's weakness. Ashwini, what did you make of the sell-off?
Well, it appears that the market was overbought, and this is a good way of cleaning out weak long positions. Now, I don't see the Nifty breaking this 10,700, 750 zone like we spoke about. And particularly Bank Nifty recovered 150 points from the lows. So financials remains a very strong pocket. And, the advice on trading it is that you need to have deeper stops. Like Bank Nifty, you need a 500 point stop. On the Nifty, you need, a 150 point stop, because otherwise the market will just keep kicking you out in both directions. So my sense is that the uptrend continues. Now sooner or later, maybe global markets will also join in. And don't be overly short in this sort of correction, because we've seen once we bounce back, in one day you take out 3 days worth of downside.
Okay, stay constructive with perhaps larger stops, deeper stops, as Ashwini says. We move on to the second story. Auto stocks were the top losers in trade after sales disappointed in the month of December. Eicher was down the most, down between 8-9%. Royal Enfield sales weakened there. Mahindra & Mahindra fell about 4%. So, that brings the loss in Mahindra & Mahindra over the last 2 days to what? Almost 8%. Pawan Goenka told CNBC TV 18 earlier that November and December months were used by automakers to essentially get rid of the earlier piled up inventory. He does expect some turnaround in the January to March fourth quarter. Let's listen in to what Mr. Goenka had to say.
January, February, March should see sort of true reflection of where the demand is. I would not say that there has not been some softening of sentiment, some softening of demand. There has been. But I think it's all led simply by what happened in October and September, because of everything kind of being wrong at that time. The interest rates, the exchange rate, the oil prices, commodity prices, and I think that's what we are seeing in November, December also. And therefore, I would expect some turnaround in January, February, March. Though I must admit that last year, January, February, March was a very high base, and therefore to get a significant increase from last year will be a reasonably difficult thing to do.
Okay. Well, Prakash Dewan is here, our top auto expert. Prakash, we have many of our own questions, but I have to respect the viewer who has queued up her question. I think Saida Rao has written saying that, she has 5 shares of Eicher Motors at 28,100 apiece. He's a long-term investor. Should she look to sell or hold or sell?
No, so, a sell at this point in time is absolutely now meaningless, for the simple reason that you would lose almost 1/4 of your, capital value. So if you're a long-term investor, these drawdowns will happen, especially for these high-priced stocks, where you could have possibly bought at a time when the momentum was very strong, and the sales numbers and the current environment of a slowdown and competitive intensity, all of that's kind of going against the business. But, price is, at the end of the day, a factor or a function of the hope and promise that the company carries. And from that perspective, you can't write off a franchise like this so easily. I also thought at 28,000 it was a bit high price, but probably, the momentum was in favor of people buying into it. But now that you've seen sub 22,000 levels, you would have to hold on. And at some stage when the rebound happens, average out so that you can quickly race back to your...
So not yet time to average out.
Not yet time to average out. It will be more of a time correction, consolidation that the stock is expected to go through. It may not go further down from where it is, so let me not scare the investor in her. But the point is that at some stage you would have to start averaging out to come back to 28,000 plus. But right now it's a hold.
Ashwini, any thoughts? Eicher Motors?
Well, 28,100 is not coming in a hurry. Eicher has topped out. So topped out for a while because it was overvalued, and that overvaluation is coming off. So even if there is growth, I think Eicher will probably be in a range of say 15,000 to broadly 25,000. So there is more downside, and now those fancy 60,000-70,000 targets may not come in.
Okay. Well, we will stick with two-wheelers, and that's the third headline. Thanks to the slowdown in demand, most two-wheeler companies also have been reporting weak sales for the last few months, like we noticed Eicher. Pawan Munjal of Hero MotoCorp has called for a reduction in GST rates, especially for two-wheelers. He argues that two-wheelers cannot be classified as luxury goods and taxed at 28%. And he makes a plea for taxes to be brought down to the 18% slab. However, Bajaj Auto's Rajiv Bajaj argues that tax reduction at the current juncture will actually mean more inventory pile-up because people will postpone their purchase expecting a lower price after the taxes are cut. However, Rajiv Bajaj agreed with Pawan Munjal's broad statement that two-wheelers cannot be classified as luxury goods and a GST rate cut should be aimed at. But he says that it should be designed to offset the higher costs that will come in when the stricter emission norms kick in later this year or when the stricter safety norms kick in 2020. So attach lower GST rates to a safer bike or to a less polluting bike would be Rajiv Bajaj's view. But that's Hero versus Bajaj or a Munjal versus Rajiv debate that we had on the channel.
I don't understand that when the sports segment is 50% more expensive, the products that we sell there are 50% more expensive than what sells in the mid-segment, commuter segment. What will be achieved by reducing 28% to 18%? I'm not quite sure. So I think the answer lies elsewhere. At a time when demand is soft and the industry has high stocks, if a consumers were to be told today that GST is coming down, let's say on 1st March or 1st April or something, by 10%, demand will fall by 50%, I can guarantee you.
Okay, so that is Rajiv Bajaj putting forth his views on the subject. Vikas from Kerala has written in to us with a question on Bajaj Auto. He's been holding 280 shares of the company for the last year. His cost is 3,285 rupees. The long-term investor wants to know whether to hold or sell. Prakash, Bajaj Auto.
No, absolutely. This is also not a sell to be. In fact, at 2600, I have been talking about turning into a buyer for the simple reason that Bajaj has a lot of verticals, a lot of lines, business lines that work for it. So what three-wheelers probably took away this time in number of sales, exports probably were better. You could have, the luxury bikes, the higher-end bikes compensating for a slowdown in the commuter segment. You could have, someday the quadricycle making a big difference. So, and then to say that bikes will not be sold just because there's an inventory pile-up up to December, we've seen this impact. We could probably price that into the numbers that are December end quarterly earnings. But Jan, Feb, March could be very different given the fact that we are rolling into an election season. So, 26,600 to me for Bajaj is a buy, in fact. So I would definitely not have a sell on it at this point. It definitely is a hold, and you could probably keep on adding more if subject to, of course, liquidity.
Yeah, actually, Eicher is owned by a lot of funds, big marquee funds, and they would be perhaps now making some space for Bajaj Auto by selling out on Eicher. And therefore, Bajaj Auto could find some bit of switching demand as well. Therefore, take your point entirely. But what is the technical view, Ashwini?
See, there's a problem that I have with people's understanding of, autos. They think of it as a consumption story. It is a cyclical story, and every 2, 3, 4 years, you will have these auto stocks getting into a problem. Now, Bajaj Auto, the range is 2400 to about 3200. Now if somebody is bought at 3200, there is very little upside. So try to figure out the range in bad times, and then that is the point to buy. Bajaj Auto, you need to buy closer to 2400, so maybe average down, whatever. But if you are at 3200, unlikely will cross 3200.
Okay, well, we take a very quick break here, but before we go, here is some market opinion from Yan Den, Global Head of Research at Ashmore Group. Listen in to what he had to say in terms of markets. We will be back in a jiffy. We'll take more questions on the other side.
I think emerging markets are cheap compared to developed markets, considerably so actually. And I think they have reasonably bright outlook. And I think flows will continue to come into emerging markets this year. In India specifically, the focus is very much going to be on the election. As the election gets closer, markets going to get more and more nervous. And that'll probably be an opportunity to get back into the market at more attractive valuations.
So we've been running through the headlines, and we got through 3 of the 5 that we put forth every day. And here's the 4th one. Metals were one of the big losers on the street. The Nifty Metal Index dropped over 3%, and the losses were led by Tata Steel, JSW Steel, Hindalco, and more. This comes on fears of a slowdown after the Chinese manufacturing PMI number contracted for the first time since May of 2017. CLSA, the brokerage too, has downgraded most metal stocks and their estimates. Manisha Gupta is here with more details. Manisha.
Well, it wasn't such a pretty day for most asset classes, including metals as well. And for industrial metals, we have seen nearly 12 to 26% of a decline in 2018, and 2019 hasn't started on a positive note. It started with the China manufacturing activity data, first contraction in 19 months. That actually led to a sell-off in metals. And then it was a trickling effect that we saw from the other economic data that was coming in from Asia, whether it was Malaysia, South Korea, Taiwan, Thailand, even Singapore, which has been holding up for the most time, also saw the economic data continue to decline, and that really pulled the metal prices much lower. It really is about a couple of things. One, the China stimulus measures. If we see that coming, that could be a bit of a support. And the other, of course, is the talks between US and China to sort their trade tensions. These couple of factors actually could be supportive for prices, but most global banks and brokerages do not see any major buying come in metals, at least for the first couple of quarters of 2019.
All right. Thank you very much for that. Manisha not looking very pretty. And there is a question on Vedanta. Ankit Mehta has written to us. He has been holding 149 shares of Vedant, purchased at 299 rupees last year. He's a long-term investor, he says, and he wants to know if he should hold or sell. Prakash, you track the stock. He's
yes,
still in the money, 190 now. Okay, 148. He's very much in the money.
No, 299.
Oh, sorry, 148.
So he's way off the money, actually.
Yeah, now
so
he's 100 rupees less, 50% less, yes.
Yeah, about 33% less from his bank, which is again a bit of a concern with most of these big metal names, because they've gone through a fairly visible cycle, and he probably seems to have bought it right at the top of that cycle, and the cycle doesn't seem to be reversing thanks to the kind of slowdown that we have globally and in China. So I don't think there's great hope for him. I mean, I would actually bite the bullet and book a loss in this case, and not wait for that upside, because from here he needs a 50% upside, which is significantly large for a behemoth like
and for a slowdown, slowing
in
down
an
China
environment which is a slow globally. So whether it's crude, whether it's metals, ferrous, non-ferrous, all of those. I don't
bite
think
the bullet and buy what?
So get out of it. Get out of metal first, and of course cash is king. You could deploy it in so many themes. I have been very positive on cement, which is more domestic, but that's a different tangent, of course. But get out of Vedanta for sure.
All right, gentlemen, thank you very much, Prakash and Ashwini, for joining us. We have another guest for the last headline, and this one came after market hours. The swap ratio for Dena-Vijaya and Bank of Baroda's amalgamation is out. 100 shares of Dena Bank will fetch you 11 shares of Bank of Baroda, and 100 shares of Vijaya Bank will fetch you just over 40 shares, 40.02 shares of Bank of Baroda. Joining us to discuss this further is Siddharth Purohit, the banking specialist at SMC Institutional Equities. Thank you very much, Siddharth. Would you say that Dena and Vijaya shares are going to fall tomorrow?
Yeah, hi Lata. In fact, if you look at the ratio, the merger ratio, that was one area of concern for the shareholders of Bank of Baroda particularly, because how the ratio will be decided. But it has come as a relief for the shareholders of Bank of Baroda. And for certainly Dena Bank and Vijaya Bank, there will be a disappointment. But I think in case of Dena Bank, the ratio looks a little more disappointing and the stock would react accordingly. And for Vijaya Bank, I don't think the stock will react too much negative to
Okay.
the news.
Very quickly, Siddharth, would you buy Bank of Baroda now?
In fact, earlier we used to have a buy rating on it, but post-merger we had given a hold rating. We had made it neutral because of the lack of clarity. But I think it is, now that things are clear, possibly is a opportunity to upgrade. But before that, I would like to tell you, Lata, that the entity also needs capital. In news, we have not seen the government announcing any form of capital to them. So I think that is going to play a big role going ahead for further re-rating.
Okay, I think on that I can reassure you. I quite clearly remember our correspondent Sapna breaking the story that among the candidates which will be given capital first would be, of course, PCA banks and also those who are amalgamating. So I think BOB is in the line for money and the government is quite cognizant of it.
Yeah, because if you see, their CET was close to 9% at the end of the second quarter. So the merged entity will certainly go and they will need capital. So I think now a lot of hangover is gone and for the bank, and possibly we can look for upgrading this stock now.
All right. Siddharth Purohit, thank you very much for joining us with your thoughts on the merger ratio. And with that, it is time to say goodbye.
Absolutely. Thanks very much for staying with us here on this edition of Markets Today. Talk back from Latami, everyone on the team. Thank you very much for watching.